A stock chart can look like total chaos, right? Just a jumble of lines going up and down. But sometimes, hiding in all that noise, there's a really clear story being told. And for SPML Infra, a recent analysis suggests that story is pointing to one single word: positive.
So let's get right to it. The bottom line, according to this technical deep dive, SPML Infra has a positive outlook for the medium term. We're talking the next 1 to 6 months. But a call like that needs some serious backup. So how in the world did they get there? Let's break it down.
And that really is the big question, isn't it? This isn't about throwing darts at a board. It's about reading the signals hidden right there in the chart. We're going to walk through the key clues that led analysts to this optimistic conclusion. To figure out where a stock might be heading, you've got to understand where it's been. And for quite a while, the story of SML Infra was pretty simple. It was trapped, moving in a very predictable and downward direction. If you look back at the chart's history, you can see this clear pattern taking shape. For months, the stock price was just bouncing between two parallel lines, like it was stuck in a corridor, heading steadily down. This is what chart watchers call a falling trend channel. The stock was basically on a down escalator, and it couldn't get off.
Okay, so I just threw a technical term at you. Let's quickly unpack that. What exactly is this falling trend channel that had the stock in its grip?
The easiest way to think about it is like a river flowing downhill. The top line is the resistance bank. It keeps the price from going too high. The bottom line is the support bank. It props the price up, and the stock just flows between them. Now, as long as it stays inside that channel, the downtrend is likely to continue. The keywords there are as long as.
And that brings us to the main event, the plot twist in our story. Because patterns, well, they don't last forever. This is the moment the stock decided to stop following the old script and did something new. It broke free. And here we have it, signal number one. The price didn't just bump its head on the top of that channel and fall back down like it had been doing. Oh no. This time, it powered right through it. In the world of technical analysis, that is a huge deal. It's a sign that the old downward momentum might finally be broken. But it didn't just break a trend line. It smashed through a very specific price level that was acting like a psychological ceiling for traders. And that magic number was 190 rupees. This was a critical wall to break down. The analysis makes a point to state this directly. Crossing that 190 rupee mark wasn't just another small move up. It was a powerful statement to the market that the buyers were finally wresting back control from the sellers. So, what does a breakout like this mean? Well, according to this analysis, it's a pretty clear forecast for a further rise. By clearing that hurdle, the stock has essentially signaled that it has the potential for more upward movement ahead. Okay, but here's the thing. A price breakout all on its own can sometimes be a fake out. So to be really sure, analysts look for a second piece of the puzzle to confirm the move. And that piece is trading volume. Think of it this way. Price tells you what happened, but Volume tells you how much conviction was behind that move. A big price jump on low volume is like a whisper. But that same jump on high volume, that's a shout. And you're much more likely to pay attention to the shout. And there's a classic relationship between the two. Generally speaking, you expect to see lots of activity, high volume, when a price hits a major peak. And you see less activity, lower volume, when it hits a bottom. It's basically a way to measure the market's enthusiasm. So what did they find for SPML Infra? Well, the volume patterns were lining up perfectly with the price action. The analysis specifically points to a positive volume balance. All that means is that there was more buying action on the up days than selling action on the down days. This is like the official confirmation stamp. It's the market basically shouting its approval of the breakout, which makes the whole positive case that much stronger. All right, we've looked at the escape from the channel, we've looked at the key price level being shattered, and we've looked at the confirmation from volume. So now, let's put all three of these puzzle pieces together and see the full picture they create. And this lays it all out beautifully in 3 simple steps. First, the stock busted out of its downward prison. Second, it smashed through that 190 rupee ceiling. And third, the whole move was backed by strong, positive volume, which gives it a ton of credibility. 1, 2, 3. And that brings us right back to where we started. All those signals, when you line them up, lead to this single, clear conclusion from the analysis. This isn't just a random guess. It's a final verdict built on a foundation of technical evidence.
So, the analysis of the past gives us a clear, positive signal for the medium term. It's a pretty compelling story of a great escape. But as with any market analysis, it's just a snapshot in time. The technical signals are flashing green today, which leaves us with the ultimate question: what story will the future tell?